Hello everyone. In this video we're going to be completing the homework for chapter 2, and so let's begin. Alright, question 1 asks us to indicate whether the terms of the accounting equation will change, decrease, or stay the same for each transaction by choosing the appropriate action from the drop-down menu. If an item does not change, we select no change. Okay, so we have assets, liabilities, and our owner's equity. And if we're going to be paying salaries for the current month, we're going to see a cash decrease, so that will be assets decreasing, and we'll see a salaries expense, which will reduce owner's equity, so decrease there. Purchasing equipment on credit will cause an increase to our assets for the equipment and an increase to our liabilities for the amount that we owe as we're buying this on credit. So it'll be paid in the future, in essence, not paid with cash at the time of purchase. Purchase furniture using cash, we're going to increase assets, and that will be the furniture asset. And we will also be reducing cash for the same amount. So one asset will go up, furniture, and one asset will go down, cash. So all in all, there's no change in total. We made an additional investment into the business, so that will be an increase in cash, and it will be an increase in owner's equity for a contribution. Receive payment for services to be provided next month, so we have an increase in our accounts receivable asset to represent the fact that we will be receiving that payment in the future, and an increase in our owner's equity for the revenue that was earned. We made partial payment for equipment purchased on credit. So this will be paying down some of that liability for purchase of equipment. So we are making that payment with cash, so a cash decrease, and then we'll have a decrease in liabilities for the portion of the amount that we owe still for this purchase that's being reduced. Billed customers for services performed. So we're going to increase for our accounts receivable asset, and we're going to recognize revenue, which will increase owner's equity. Withdrew cash for personal use. We're going to decrease the business's cash asset, and we're going to decrease owner's equity for a withdrawal. Received payment from customers already billed. So we're really having no change here because we've already recorded the asset increase and the revenue previously. And when they're paying us, now we're just exchanging one asset for another in essence. So we're receiving cash, cash will increase, and accounts receivable will decrease to reflect that we have received those amounts. Received bills for utilities to be paid next month. So we're going to have an increase in our accounts payable, increase in our liability, and we want to recognize that expense because we did incur those utilities in this month, even though the cash will be paid, assets will be paid, to reduce this liability in the following month. Oh, sorry, I hit increase there. That should decrease for representing the expense that we have recorded for that. Oh, I guess we have to put no change in. Sorry, if there is no change as well. So let's go through and just identify those. And what do we got? Receive payment for services to be provided. So we received cash, but we have not yet done the services. So that will be unearned revenue, not revenue. I misread that. Apologize. And then made partial payment. So let's go to change. There we go. Now we're at 100%. And on to the second question. Transactions. A little typo there. Okay, the given transactions were completed by Juliet's delivery service during May 2024, and we need to indicate the effects of each transaction by placing the appropriate letter in the space provided. Okay, so we received cash for providing delivery services, so we're going to have an increase in an asset and an increase in owner's equity for the revenue that we are recognizing. Paid amount owing, that was outstanding to a creditor, so we'll have a reduction in an asset, cash being paid, and a decrease in liabilities, so D. Invested additional cash in the business, we'll have an increase in cash and an increase in owner's equity. So C. Paid advertising expense with cash, so a reduction in asset and a reduction in owner's equity. Looks like that's E. Billed customers for delivery services on account, so we'll have an increase in accounts receivable and an increase in owner's equity, so C. Purchased office furniture on account, so we'll have an increase in asset and an increase in a liability since it's on account. Paid rent for the month, we're going to pay the cash will decrease, so our asset down, and an expense will reduce our owner's equity. Received cash from customers on account, so we have an increase in one asset, a decrease in another asset. Accounts receivable goes down, cash goes up. Received cash in advance for services to be provided in the following month. That's going to be an increase in cash and an increase in a liability for the unearned revenue. And then finally, the owner withdrew cash for personal use, and that's going to be a decrease in cash and a decrease in owner's equity. So I believe that is E. Let's check our answers. Purchase. Oh, I'm sorry. Purchased office furniture on account. I thought this was just purchasing office furniture originally. So we purchased an increase in asset and an increase in a liability. If we had paid cash, that would be the right answer, but it was on account. So, okay, on to the next problem. For the following transactions, fill in the table by selecting two accounts related to each transaction. Two accounts are affected. List balance sheet before income statement. If both are balance sheets, list them in the order they appear on a balance sheet. By order of liquidity. So balance sheet accounts, this is before and first. This is one part of the question is just filling out the instructions kind of. Okay, so invested cash in the business. We have cash as an increase, and we have owner's equity, or let's use owner's capital here. I'm going to check myself just to make sure I'm doing this problem right. Okay, purchase service automobile for business use. So we have an automobile equipment, we'll call that for now, and we purchased it. Doesn't mention anything about. Okay, so I think we're going to want to do cash and equipment. The instructions are a little vague on this, but let's try that. Okay, so it doesn't want equipment. What? Oh, there's a vehicle account, sorry. So cash down, vehicle account up. Collected cash for services provided this week, so cash goes up. And accounts receivable goes down. Provided services this week on credit, so accounts payable will go up. Oh, I'm sorry, provided services, so we're accounts receivable will go up, and revenue will also increase. Paid operating expenses in cash. Cash will decrease, and our operating expenses will increase as well. Collected cash for services provided this week. Okay, I think what they're trying to get at, here, is that we're going to have revenue recorded there. So on this one, we collected cash. So we got the cash and we recorded the revenue. So yep, had that one incorrect. Received a bill for operating expenses incurred this week. So if we received the bill, we've got accounts payable going up and operating expenses also going up. And note that it didn't say paid the bill yet. That's when our accounts payable would go down and cash would go down. Received a loan from the bank. So we're going to have cash. And then we're going to have a loan payable, so a notes payable there. Collected cash from customer for services previously provided, so cash will be going up, and accounts receivable will be going down. Paid monthly salaries to employees with cash, so we have cash being decreased and salaries expense being recognized. Incurred operating expenses this week to be paid next month. So we have accounts payable and operating expenses being recorded. So we want to record the expense even though we haven't paid the cash yet. Keep that in mind. Okay, we paid cash for expenses incurred previously. Then we're going to have a cash decrease and our accounts payable decrease. This is kind of step one, step two. We received cash in advance for the service to be provided next month, so we have cash going up, and we have unearned revenue because we haven't yet provided those services. All right, and that gets us 100% there, and we'll go on to the next problem. Okay, question number 4. Organize the following asset and liability accounts in the order they are likely to appear in the balance sheet. So again, assets listed by order of liquidity, cash being the most liquid. Liquidity is basically the concept of how hard is it to convert to cash. Equipment will definitely be at the bottom. Let me check myself. Accounts receivable, I believe, is second. Yeah, prepaid expenses. So these liabilities then are in order of what's going to be paid first, essentially. So accounts payable is always kind of typically the first one. Unearned revenue, and then more of a long-term, usually the long-term liabilities are the last. And accounts payable first, so unearned revenue in the middle, and 100%. Okay, on to the next problem. Match each term with the appropriate description. This type of business buys goods to resell, so that will be a merchandising business. An automaker is a manufacturer who creates the products they sell. This is the most liquid asset. We just said that. Cash. A law firm is an example of a service business. And this account represents the amounts owed to the business by its customers for services performed earlier. That's accounts receivable. Okay, question number 6. Simpson Moving had the following transactions. Indicate whether assets, liabilities, or owner's equity will increase or decrease, and how much. Okay. And if we have 2 in the same category, enter the positive first. Okay. So the owner invested $8,480. So we're going to have those are contributions. Cash goes up. Owner's equity increases. Paid $35.60 for cash. $35.60 cash for 1 year of prepaid insurance. So I think they want us to do the, oh shoot. Sorry, I meant to hit check. Okay, yeah, and I don't think we'll have to come back and see if we need to put zeros. I don't think we need to put zeros in the blank spaces, but received a telephone bill for $160, which will be paid later. So we're going to increase accounts payable and decrease owner's equity by $160 to represent the expense recorded. We purchased equipment on account. So the equipment will increase by $900 in our assets, and our liabilities will also increase by the same amount because we bought it on account, not with cash. Provided services and collected $4,600 in cash. So we have a $4,600 increase in AR. In cash, not AR. We're just getting paid in this one. And then the revenue that we record will increase owner's equity. Paid $900 towards the bank loan, so $900 of cash, and decreased $900 of the related liability. Paid $64 of interest on the bank loan. And so this is going to be an expense as opposed to the payment principal. So that will reduce owner's equity instead of liabilities like the example before. Paid $900 of accounts payable. We're going to have cash decrease and the liability of accounts payable decrease as well. Okay, and that gets us 100% on that problem. So we didn't have to put zeros. Okay, on to problem number 7, question 7. Okay. This one might take us a little bit longer, it looks like. Yeah, so we've got a full problem here. So let's get started. Okay, we have opening balances. So we kind of have to do both of what we just did and then put it into T accounts. So borrowed $11,400 from the bank. We're going to show an increase in cash and an increase in our note payable, our loan, our bank loan. Purchased machinery for $7,400 of cash. So that's just exchanging one asset for another. Billed clients $3,010 for completed services. So we are recording it, booking in accounts receivable and revenue, not cash because we billed them, we hadn't received the cash yet, right? But still an asset, accounts receivable. Okay, we paid $940 for maintenance, and so maintenance expense will reduce owner's equity and cash being reduced for the payment. Collected $2,130, so cash will go up by that amount. Accounts receivable will go down by that amount. We prepaid rent, so our cash will decrease by $3,100, and our prepaid expense asset will increase by $3,100. We recorded $2,270 of cash sales, so sales revenue and cash going up, both of those. And we paid $970 for expenses owed. Oh, sorry, not for it was owed to a supplier, so it is a payable type situation. So we were going to reduce our liability and reduce our cash as well. Let me just hit check real quick. Okay, we got all those in there. We'll find out at the end if we're missing anything. Okay, so we've got opening balances here. I'm going to do a quick snip, my snipping tool, so I can see these balances and I don't have to scroll up and down as much. So cash beginning balance is $1,190. Accounts receivable is $840. Prepaid expenses is $230. Machinery is $3,500. And then accounts payable, so onto the liabilities then. Accounts payable is $1,210. No opening balance for notes payable. And then our capital account is $4,550. Okay, and then bear with me for one moment while I snip the transactions, and then we'll input them to the T accounts. Okay, so the first transaction, we borrowed $11,400 from the bank, so we had an increase in cash and an increase in our notes payable of $11,400. We purchased machinery for $7,400 of cash, so that's going to be an increase in a decrease in cash and an increase in our machinery account. Both assets, but one asset for another being exchanged. Billed clients $3,010 for completed services. So this will be an accounts receivable, transaction 3. And we want to record revenue for that also. So on the increase side of revenue, $3,010. And then accounts receivable was the increase, the other increase here, yes. Okay, transaction 4, paid $940 cash for regular maintenance on the machine. So we're going to do a reduction, a decrease in cash at $940. And then I think we've got a maintenance expense here. And that was number 4. So $940 maintenance expense recorded. Collected $2,130 from clients who owed money. Transaction 5. So our cash goes up and our accounts receivable will be decreased. And this is transaction 5. So one asset goes up, the other asset goes down, and that's kind of the natural progression of accounts receivable, right? You perform service, you earn revenue, not yet paid, but once you get paid, you want to reduce that balance so it shows that you don't have any further amounts to be collected from that customer, basically, right? Okay, and then we paid $3,100 in advance for 4 months rent. So we paid the cash, so decreased cash, and then we have prepaid expenses going up, in this instance, prepaid rent by the same amount. We recorded $2,270 of cash sales, so cash will go up, and then revenues of $2,270 get recorded. And our last transaction, we paid $970 owed to a supplier for transaction 8. So $970 reduction, And our accounts payable then, transaction 8, will be reduced by 970 as well. Okay, so now let's go through and summarize all of our T accounts and add everything. So start with our opening balance and then increase for all the increases, add those and then do the decreases. So I'll do that now here in Excel off to the side. Let's see what we end up with. Okay, so I end up with 4580. Let me double check my math here. I'm sorry, 2270, 7400. Yep, okay, I think that looks good. And we've got 840 plus 3010 minus 2130. And that gives us, I calculate 1720 as an ending balance. Prepaid expenses, we had 230 to start and we added 3100. So now we're at 3330. Machinery, we started with 3500 and we added 7400. So now we're at 10,900. Okay, accounts payable started with 1210 and then we paid down $970 of that. So we ended up with 240. Notes payable just increased. No payments on the note yet of 11,400. And then capital will just carry down. There's no withdrawals. We had 2 revenue transactions to record. So 5280 in total. And then we only had a few expenses, so 940 of maintenance expense. Okay, that's all I show. Let me input the totals here. Only 940. I feel like I might be missing something, but it's okay. All right, now let's finish it off and we'll hit our check figure and see if everything shows up. So 4580, let's add all our assets together here. 1720, 3,330, and 10,900. Give me 20,530 for total assets. And now let's go to the liabilities. We got 240. 1,400 gives us 11 total liabilities of 11,640 by my calculations there, and then owner's equity of beginning balance of 4,550, 4,550, right, plus our net income, which is 4,340. I got 8,890. And then if we add the liabilities and equity together just to check ourselves, it should equal our assets. 20,530. Okay, well, felt like I was missing something, but let's see here. All right, no, that was it. Okay, only one expense. Just seemed a little bit funny with that, but we got 100% on that problem. And that problem is complete. What number is this? Is 7? This was number 7. Okay, on to problem number 8.